Hi, this is Randy Finney with Right Side of the Chart, and today is Monday, August 6, 2018. In this video, I wanted to do an update to the BJK swing trade. That's an active trade on the site right now, and I wanted to also do an update on the components. There's only 13 stocks in there, at least on the watch list. I'm showing 13 individual components of there. As I often say, an index or a sector or an ETF is simply a sum of its parts. So if can make a case for a long or short trade on a sector ETF or an index for that matter, I like to look at all the components if possible, at least the top weighted components, to see if they clearly confirm. In other words, on the majority of stocks within there, also confirming, bullish or bearish technical posture or not. If not, maybe stay away from it. But in this case, I think they are. So I want to do an update to this trade, the BJK trade, go over the trade ideas within there, the individual components. So there's really three points to this video. I think there's a takeaway for everybody here. Number one, first and foremost, are trading opportunities, whether it's BJK or some of these individual stocks, casino stocks that I'll go over within BJK. Also, there's a couple good TA examples, technical analysis examples in some of these stocks that I wanted to point out, tools that you might be able to incorporate into your own trading or investing. And then finally, I want to really hammer out the bigger picture, the trend potential in this sector, and really in trading in general. I say that because if you're new to the site, if you're in the trading room a lot, I'm all over the place. I am first and foremost, my primary trading style is a swing trader. Swing trading is trying to capture a move in a stock or a sector, an index or a commodity, whatever it is, that lasts on average a few weeks to a couple months, maybe a few months. Sometimes those swing trades last only a few days because they're explosive patterns and the stock breaks out. But sometimes they can go on for 6 months. But again, on average, let's just say a few weeks to a few months on a swing trade. However, I also wear a hat as a day trader. If I see a day trading up, I'm in and out. So I might be in and out of a stock within, minutes or hours and close it out the same day. And then I'm also an investor, trend trader. There are some trades that you can put away, hold on to if they look good, and hold those for many months or even years in some cases. So that's what I'll go over today is some of the longer term trends and trend opportunities in this sector. All right, let's dive into the charts. Before we do, I just want to say this is an update as well. Back on, I'm looking at another monitor here, March 23rd, I put out a video, Casino and Gaming Sector Trade Ideas. You can find that on the front page. Go to the ticker, select ticker box, and select any of these ticker symbols, MGM, BJK, BYD, all the stocks I'm going to cover, and you'll see that it'll pop up probably third or fourth down. And on in that video, I highlighted some bearish developments in the casino sector. Again, that was March 23rd. So let's just look here. If I take the crosshairs, we're right about here at this point when I did the video. However, some of those stocks I had mentioned were coming up on support or hadn't yet broken down, and so I wasn't bearish on the entire sector as much. But just wanted to kind of that was a heads up video. I'll often do that if I see a sector or an ETF that's setting up bullish or bearish. I'll do a video, highlight some of the components. But then the timing came a few weeks or a couple months later. On May 24th, I added BJK as an official trade idea. And that was literally after the day it topped right there. So we got the timing right on this one so far. In fact, we already hit our first target for an 11% gain. You can see this ETF fell virtually, straight down from there. We had an 11% gain. And here's another takeaway from this video. This is why I use multiple targets. Each target level is an area where I expect a bounce. I think a bounce is likely, at least at the time I put that trade on. Remember, I'm looking out months ahead here and trying to figure, okay, where are we going to have probably the first significant reaction where an active trader may want to reverse that trade, meaning cover the short, go long for a bounce, or someone might want to test book profits. Hey, I'm happy with 11%. I know you're shooting for more. And again, it depends on your trading style. So, and that's what happened. We had the counter trend bounce. We had a little momentum overshoot. I call that a momentum fueled overshoot when there's a lot of velocity. Stock is heading straight down or an ETF or straight up. You blow through resistance. When you're headed straight down, you tend to snap through support and then come back. So we overshot it by a day or two there. Counter trend rally, and now it looks like we're on the next leg down. So this will remain the final target on this trade, T2 41.75, where I'll be closing the trade out. I would, personally be taking full profits. And the reason is, well, a couple things. It's based on a lot more than I can even sit here and put together in words in this video. But that's where I expect the first decent reaction. And if things go the way I think they might, and we continue down there in the next few weeks, we hit that level, we have the potential to put in a divergent low here on the daily time frame. I'm talking about positive divergence. You can see the line I've drawn here. So if we head down a little bit more, and keep in mind that I put my price targets on a short trade, they are above the actual support level. That support level's actually at, let's see here, 41.58. So you can see there I covered about 17 cents or so above that level to help minimize missing a fill in case they reverse it just shy of support. So there's the near-term outlook for BJK. Weekly chart. And this is what we're going to get into here. We're going to look at some weekly charts. This is actually the second revision. I was doing this video this morning. I started it right around the open or a little before the open. And it went over the 30-minute mark. And I'm like, that's too long because I was still had just wrapped up all the weekly charts. I was getting into the daily time frame. So I'm going to do this a lot quicker this time around and fly through these charts real quick to just paint the bigger picture. So the bigger picture is this. I'm going to start out here on the weekly charts. And this is BJK again. So this gives us an idea of the sector. This is a combination of all 13 stocks that we're going to go over. And you can see that the casino stocks tend to work in trends. And you do have periods of sideways consolidation, but there are also these periods of pretty distinct trends, downtrends and uptrends, bull trends and bear trends. And right now, well, we can say since early 2016, late 2015, we've been in an uptrend. That uptrend line has been violated. This most recent uptrend ended with a divergent high, negative divergence on the weekly time frame. So we haven't seen that since all the way back here. The last time the sector peaked back in early 2014, and that led to, and this is why I'm doing this video, the profit potential on trading these casino stocks is much, much, much larger than trading the broad markets. You're trading SPY, QQQ even. This bear market was 50%. So you've made a 50% return on your money shorting the casino stocks there. They dropped 50%, and then they turned around. We had a rally of 84%. So keep in mind that this 50% drop, as well as some of these other drops here, I'll just real quick kind of give you an idea of how much a sector goes up and down. There was a drop of 30%. That might not look like much on these little drops here, but that's 18, almost 20%. So there's a lot of money to be made on the long and short side because this is a much more volatile sector. When it's trending, the upside potential, when it's trending bullishly, is a lot more than the broad market, and vice versa on the downside. So by all accounts, the negative divergence, just like we had positive divergence at the lows, this is, I don't want to oversimplify it, but is what I call wash, rinse, repeat stuff. You look for these divergent highs. Some play out for more than others, but in almost every case, you have a nice correction after the divergent highs, and you have nice rallies, especially in a bull market. It doesn't take much in a bull market. And that's the other point, guys. Remember that this 50% drop right here occurred in one of the strongest bull markets in the history of the country, in history of the world. And we've had several other during this great bull market. We've had a lot of 30+% drops in here. So the profit potential is huge, especially if, sooner or later we are going to have the next recession. Recessions are a natural part of the economic cycle. They cannot be avoided. They can certainly be delayed, as this one was by, the easy money policies of the Fed. But when we have a recession now, think of the potential here. We had a 50% drop in a roaring bull market. So there's a lot of potential on the downside on these stocks. And again, as I go through the weekly charts of the individual components and maybe even the monthly charts, you'll see that. So let's dive into those and we'll try to wrap the video up. Here's Las Vegas Sands. It doesn't look like much here. I use log scaling. It's a big difference when you go to arithmetic. The trend lines change. I feel it's imperative to use log scaling on long-term charts. But if we cut out the dip in the financial crisis there, here's what you can see. And again, you see a stock that tends to work in these trends, uptrends. There are sideways consolidation periods. That's when you don't want to be in here. You get grind to pieces, whether you're long or short. You want to catch these trends, and that's what we're looking at here. bull and bear trends. And by all accounts that I look at, just like we had back here in 2014, we had a divergent high, negative divergence on the RSI, the PPO. That marked that top, and Las Vegas Sands dropped from that point about 60%. Bottom there, and there was positive divergence. I don't have all these charts marked up, but I can tell you there was nice, clean, bullish divergence. Told you to look for a bottom in the stock, broke out of the downtrend line, back tested it. So there's another thing. These stocks tend to work very well to technical analysis. That's a clear downtrend line, breakout, back test, boom. Now a breakdown right there. So there's a longer term sell signal, a lot more to come. And when you look at a monthly chart, you can just see how much this one can move. Actually, that one almost went bye-bye in the financial crisis. So let's get away from that one. That one dropped down to about $1.67, I think it was. Next one up, Win. Same story. Here's your trends. Very clean uptrend lines, break down from highs to lows, 43% drop from high to low, 79% drop. So you're getting the picture. The profit potential on the long or short side, even in a bull market, is tremendous on these stocks. That's just the cyclical nature of the gaming sector. So there it is. Well-defined uptrend line, negative divergence at the high, like I like to see. Clear breakdown, impulsive selling. We're down below that 40-week moving average right there, the red line. We're above it there, below it there. Does a pretty good job of defining trends. So there's win. And let's go on. Look at a couple more. Or actually, let's look at the monthly chart of win, because this goes back to 2003. And again, the picture I'm trying to paint here are the larger trends. There's trends within there in a monthly chart. Every candlestick is 1 month period, but you can see how big these trends are, how cyclical this industry is. So if you can capture a trend and ride out the counter trend bounces, or at least time those. And again, that's what we try to do here. That's what I try to do by doing these update videos, to show you, okay, well, like I'm showing you now, BJK may be coming up on a first, or the next, the first decent counter trend bounce. So you may want to, at least, if nothing else, if you don't want to cover, if you took that short where we did, you're up by 12+% right now. Set a stop at least at entry and let it ride for maybe a 50% plus short trade, or trail your stops down to protect profits along the way. But then manage that trade strategically. If you see bullish divergence coming up on solid support, and most of these individual casino stocks look like they're also going, poised for maybe a counter trend rally, at the very least, don't add to your short position there. You don't have to cover it. You can cover it. Try to sidestep that counter trend rally and then jump back in at a better price. But at the very least, I'm trying to say is don't short the casino stocks at that point when they're oversold. Because I'll tell you what, as much as I love shorting stocks, I love nothing more than going long stocks in a bear market. Bear market rallies are awesome because they're fast, they're powerful. You get the shorts squeezed out. So you can make more money in a bear market rally than you can in a bull market rally, and I'm talking over a short period of time. So there it is. I'm just again pointing out the longer term trends, and this is what we're trying to capture here. And again, this is log scaling. Prices go from 250 down to $10. So these trends measure well into double digits, 80% correction, 100 or 287% bull market. You get the point. Okay, I promise to do this one a little faster. MGM breakdown, weekly trend line, negative divergence. You had bullish divergence here at the lows right there. Bullish divergence right here at this low. You get the picture. So by all accounts, this one's broken down, has more downside to come in the coming months plus. MLCO, beautiful chart. Look at these trends. Trend line, just short those trend line breaks. I mean, I feel like adding all the trend lines to this chart. I just haven't had time. But there it is, just, on the short side only. Can go long too. You can take a downside breakout of a downtrend line. Bullish divergence confirmed at the lows. That sets you up for a nice rally there of about 140%. And I think the next bear market's begun. Probably think we'll probably come on to take out these lows eventually. So a lot more meat left on the bone. I just have to go to the daily charts to tell you whether it's objective to short here or to hold off. MLCO. The stars group, I don't have much on that weekly chart. GLPI, here's one TA example I wanted to share. When I look at this chart, what stands out to me, it looks like an EKG. That's my initial reaction when or impression, I should say, when I look at this chart. I see a stock that has clearly trades. It's either in an uptrend or a downtrend, no in between. A lot of those other stocks I showed you have periods, and there are exceptions. Here's some sideways consolidation, but for the most part, this to me looks like an EKG. This stock trends well. So all you have to do is to identify the change of trend. You don't have to nail the top or the bottom, but you get into the bulk of the trend, and there's a lot of money to be made in this thing. That drop there was 35%. That rally there was 44%. 20%, 35%. So what gives you an indication when the trend has changed? Well, let's look down here at these indicators. Since this one does have these clear trends, this is where a momentum indicator like the PPO shines. PPO, very similar to the MACD. And what I'm referring to where it shines is there's clean separation. When a stock trades sideways or in a sloppy range, these lines compress, and it's hard to take much out of it other than maybe looking for divergences. But one of the most simple and pretty effective buy and sell indicators are PPO crossovers, bullish and bearish crossovers. Same with the MACD. What I'm referring to, you have your PPO line and the signal line, which is a 9 EMA. And when PPO line crosses down below the 9 EMA or the signal line, that's a bearish crossover. And when it crosses above, that's a bullish crossover. So you can see, and I haven't marked them all here. I'll mark a couple there. You have these buy and sell signals. So let's just look at what happened there. Let me grab a circle tool. So we had a sell signal there, about right around there, buy signal there, sell signal there, buy signal right about here, sell signal there, buy signal there. Okay, you get it's pretty simple stuff. And again, I need to say this. I do not use any single technical indicator as a standalone buy and sell signal. In this case, this one would have worked on this stock, at least going back in time. Doesn't guarantee it'll work going forward, but I do use them in conjunction with other things. I look for example, come down to the RSI, and you can see we had negative divergence. We were also overbought. So when you look at these circles, the highs and the lows, again, coincide with these overbought readings. The high, your stock is overbought. And I'm referring to these lines here. The red line's 70, the blue line's 30, and you are oversold. So that's what you want to look for on this stock. You want a mixture of overbought or oversold and wait for those bullish crossovers. And again, then you would hone down, or what I would do is hone down or zero down to the daily and 60-minute charts, and then look for buy and sell signals via trendline breaks, breaks of support or resistance, bullish or bearish candlestick patterns, things like that to time my entries. But this tells me the bigger picture. And we don't have to always hit oversold and overbought. Right here, we fell shy, reversed above the 30 level. This time around, we reversed shy of the 70 level, but we do have a trend line break right there. And right now, we don't have a cross yet, but if we do, and PPO is starting to roll over, we get a bearish crossover. So that's what you want to look for. And we might have our next sell signal here in GLPI for a trend trade that could be, easily 20+%. CZR, Caesars Entertainment. Not much to say. Back here in 2013, we had a divergent high, led to a pretty big correction right there, well into the double digits. Pushed up again, made another equal high, went on to then break this primary trend line. That was your big sell signal. So we had consecutive divergences right here. Divergent high 1, 2, breakdown, confirm with a big red candle. And just to put it in perspective, how much this stock like this can run, this one dropped 86%. I'll take 86% or any small fraction thereof any given day. And like everything, nothing falls straight down, at least a primary trend. You always have these kickback rallies, and they're lucrative to trade or to sidestep if you're short. That was an 88% counter trend rally. Most people would kill for 88%, over 10 years in a stock. But that's the nature of these beasts. At least this one. This one's a little more volatile than most. And then at the bottom there, you had divergence, positive divergence, bullish divergence on the RSI, and from there the stock rallied about 340%, and ended with this bearish rising wedge, breakdown backtest, and it's been moving lower since. So that's it. Trend indicator I circled here is now the PPO is below the zero line. That's another buy sell signal. When I put the crosshairs there, look at the horizontal line. That's the zero line. and it does a good job of defining bull and bear trends on certain securities, not all, but you look for the crossovers. When the signal line, the 9 EMA, the white line is above, the trend is bullish, as it was told you throughout this period. When it crosses down below, it tells you the trend's bearish, and it stayed bearish all the way to about right here. Cross bullish, it said the trend was bullish, so yeah, you can see. And now about this point, it crossed down bearish, and that's what we're telling us, and that's telling us we're in a bear trend now. So, despite any counter trend rallies, this one's probably headed lower. IGT, bearish rising wedge breakdown. Again, I have to move on now. You can see the charts. Just glance, look at the annotations. If you see circles, those are oversold readings, stuff like this. I said I would move on, but oversold, oversold, and every stock's different. That's why I don't have these circles in all of them. This one, oversold, buy that stock, get long. You can't go along at the first oversold reading. You wait for confirmations. Here was a confirming buy signal, the bullish crossover on the PPO, just like you had a bullish crossover on the PPO here. So you see I'm stacking on these additional supporting evidence. And again, if you go down to the daily and weekly or 60-minute charts, you probably had trend line breaks and some other things that told you to get long or to get short. This one. So this one said, this is a weekly time frame. Here's a breakdown, and just going back again, and we're looking at bull market numbers right here. This is a 10-year weekly chart. There was the last weekly divergent high and trendline break. We're overbought here on the weekly. Look at these drops. And so there's nothing that I see in the charts that tells me over in the coming months, next year or so, that this stock is not going to continue lower. I believe it will. BYD, Boyd Gaming looks okay. It's above its long-term trend line now. I think it'll visit that trend line. It'll probably get dragged down with the rest of the sector, but one of the better looking stocks at this point in time. Churchill Downs, uptrend line, still above uptrend line support. Divergent high indicates that a breakdown is likely to come sooner or later, but it's at support on the weekly. SGMS, Scientific Games Corp. Beautiful looking chart. If you're a bear or you're short, flexible trader, you can short or go long. This one was in a multi-year basing pattern here, broke out at this point and had its first decent trend right here, but that trend ended with a wedge type pattern, negative divergence. There's your divergent high, came on, broke the trend line, back tested it, flagged a little right there, and then boom, impulsive selling right down through that $40 support level. Maybe a kickback rally, that would be your next objective. Short level around 40, but ultimately this one will come back down to at least right here, I think about the $28 level, possibly back down here, quite likely actually to test that top of that multi-year pacing pattern or trading range. ERI, Eldorado Holdings, you can see the divergences, highs, lows, divergent low there. That, again, in a bull market, it doesn't take a very big divergent low to spark a rally. It takes quite a bit more to get that evidence to get a short trade, but we have it here. We have a nice divergent high most recently. You can see the negative divergence. Just need to take out the minor trend line here and then this primary uptrend line, and that opens the door for a much larger move down. PENN, Penn National Gaming, wedge type pattern, divergent high, trend line. So it's at trend line support. So here's the point. Some of these stocks have already broken down, some haven't. So there's a lot of potential there. You zoom in on one like this, looks like maybe a bear flag pattern flagging right above the weekly support. There's your sell signal, longer term sell signal that is on a break of the weekly trend line. And that's it on the weekly chart. So if we have time here, let's see, 23-minute. Yeah, I'm doing much better than the other video. So let's just fly through these daily charts. I really wanted to focus on the weekly to paint the bigger picture for everyone. But here's LVS. What I see, besides we had a divergent higher on the daily, that was bearish, breakdown back test. But this is sort of a trading range here, possible topping pattern, but we need to see it break below that level to really trigger the next sell signal. And this chart's not that cleaned up. If you want actual price, I can tell you right now, there's a potential target right about $60 right there. But you also have some support that comes in a little below where we are right now. That's LVS. Win, very clean technical pattern. We had a nice, well-defined uptrend line. Divergent high, broke down, and these are all support levels. Each of these levels, each of these lines on the chart, they wouldn't be there if they weren't. Some are older than others, but what I think happens, this one will probably go in line with BJK, where I see a little more downside to about this 139.28 area. If we get there soon, that would give us a bullish divergence. So something like this, reverse off there for counter trend bounce, maybe up to 160 or so, possibly up to this level here. At minimum, a backfill of the gap right there. So there's a potential bounce trade op right there. Unless those divergences are burned through. That's always a possibility, but that's what I favor. I see that's pretty significant resistance. So I would put very good odds that if and when Win gets to 139.28 or a little above it, A, that I think it will, and B, that it will have a reaction off that area unless something crazy goes on in the broad market. MGM, another one that's playing out well. Again, these were covered a couple months back. You can see here's the primary uptrend line, broke down, impulsive selling when it broke down, a little kickback rally to back test, and it continues to move lower and trade right off these levels. I believe these were the same levels covered in that video back in, was it March? And now this one, but at this point, and this is part of doing this video, I wouldn't be jumping the gun right now or jumping in short if you weren't already short. We're already at my second target, which just was hit. First target was hit here, 28.55. You can see we bounced from there, went right into resistance, the former support level, and we came back down to my second target now, and we've actually already bounced. Actually, I should say that target was hit last week, and we bounced right back up here. So this is my third target zone. But you can see at this point we have that potential bullish divergence building. It's already, yeah, there's divergence in place. It's just not confirmed. We need that PPO to turn up. So whether we go up here or we come down to that third target zone, maybe a little kickback rally coming in MGM soon. MLCO. MLCO is at support now. This is a pretty significant support level here, about $24. You can see reactions from above right here, or below, reactions from below, reactions from above. So it's at support, but it had a muted. This is more of it's a bounce, but this is when I say a reaction, meaning a consolidation and or bounce. This is a little of both, mostly consolidation above that level. And this PPO is way down here, ugly bear market territory, crossing over. Bottom line is when 24 goes with conviction, this is my next target there around $20 or so right there. And I do think over time that stock gets there despite any near-term counter trend rallies. TSG, the stars group, divergent high starting to play out, support, next support, and down the line, here's a long-term trend line that comes in from probably all the way back here. Yeah, there it is. So draw it this way. This one I have it on trendline support right now, or actually just a hair below it, starting to crack. So yeah, I think there's more downside to come on that one. Not one of my favorites, but I do believe there's more downside. Oops, GLPI, Gaming and Leisure Properties. This one finally broke down. Story on this one. Wash, rinse, repeat stuff. Divergent high, correction. Divergent high 2, correction that all came all the way down here. There was positive divergence there at that low, and you had a rally, and this rally was defined by a very well, supported by a very well-defined uptrend line, which is now broken down and done so impulsively. First target right here, 1317-ish, and the next target here about 3255-ish. All right, next one up. Caesars. Here's one I wouldn't be jumping to short right now because we have this big potential, again, not confirmed, but potential bullish divergence if the stock can move back up. But it has quite a bit of resistance overhead as well. So I don't care to go long or short this one right now. I'll wait for a better setup because of that bullish divergence. Maybe that divergence gets burned through and it's gone. I showed you the long-term chart, and I think there's more downside over time. So if you're looking to trade this one, objective is bounce back to this level. You could also probably put a downtrend line here off the highs, somewhere like that. So short in then this area here if you're looking to short a bounce back somewhere in that area. IGT, nice clean technicals, breakdown. It's moving lower, but potential divergence like everything else right here. So you might want to pause on that one. And again, the individual charts, and this is why I'm doing this, they sort of align with my analysis on the sector. that it's coming up on support with potential divergences. So maybe we're looking at a bounce. We'll close that official trade out, hopefully, if it gets to that level, and then maybe look to re-enter that later down the road. Churchill Downs, little false breakdown there, but it went on to finally put in a divergent high. You can see that equal high right there with the indicator severely lagging down here, and that's starting to play out. So I believe very often I'll see a false breakdown. It's usually that second one that'll stick. So I think there's more downside to that one over time. One of the better looking ones. SGMS, Scientific Games, divergent high. We had a breakdown here of the primary trend line. This is a lot like the broad market where we had breakdowns that look like they'd be the real deal, should have, but sometimes there's, everything gets a second life, a little second pushback rally, take out the previous highs, squeeze out some shorts that jumped in there, and then that's it. And then once that happens, that clears a way for a big move down. So far, this one's moving down very impulsively. We're at my this target right now, this support level here. Next support where I think it's going before any major bounce is down here at about 27. So whether we get a little kickback rally now or not, that's where I think we go down to 27, 21 around there. Should be almost finished here. ERI. ERI has not given up the ghost yet. Here's a primary uptrend line. Needs to break that. Divergent high, everything you like to see. So we're just waiting on a breakdown on ERI. PENN, PENN, divergent high. Needs to take out this trend line. If so, it's headed down here to about that 20, 22, 20-ish level. LVS, I think I already covered this one first. Yes, I did. So we're done. All right, so we wrapped it up in just over 30 minutes, but hopefully that again helps, um, give you some individual trade ideas, where to look to enter, exit, and more importantly, I think is painting the bigger picture and just how much profit potential there is in this sector, both bullish or bearish. I just right now, I see most likely the early stages of a much deeper correction, but maybe some bounce trades coming up here if you're nimble on the long side. But I just it's too early to step in right now. But again, as always, any individual stocks that you want updates on, just drop me a line in the trading room, and I'll be glad to do so. This has been Randy Finney with Right Side of the Chart. Have a great day.